you should be on week 2 or week 3, depending on where you started, borrowing the last week or 2 from March. Okay, but we're just going to call it as it is. 1, 2, 3, 4, week 5 here. 6, 7, 8, 9, 10, 11, 12, 13, 14, right? We got 14 weeks to get through this. The goal is to be qualified or trading your own real money by the end of the cycle. Successfully, I might add. That's the important part. Okay, same from last week, still valid today. The magic you're looking for is in the work that you're avoiding. Some of you still just can't get your head around marking us from charts and sending it to me. You've been with me 10 years and you haven't sent me one thing. I don't understand it. I love you for being here, but you should already be gone, retired. All right. Quick student question. Someone sent this in. I didn't see you in here, brother, but it's not necessary. This is for you. Just wondering if you have any tips on how to see anchors, peaks, reversals clearer, especially on the blue tracer. What can I do to work on this? Thank you for any advice and your time. Look forward to hearing from you. Okay. I don't know if you're here, bro. Just put a Y or something in there if you are. Okay. So listen, right off the top of my head, this is a pop quiz all day and twice today, right? What makes up an anchor? Write it down. Take 30 seconds to write it down. All right. Starting now, go. All right, who's with me? Pop some stuff up in the window. Tell me what you got. This is really the foundation of the daily cycle. You should have this nailed, right? It's variations of these things always because it's never the same. But it's variations of A or V frames, right? Or M or W. Okay, what does that look like, right? There's types 1 through 3, how they accumulate, how they run the stops. What are the elements of where they occur, right? Where are you likely to find an anchor, right? It forms the high or low of the day. It usually will land on a blue tracer, an area from yesterday. If there's a shift in the market, it will consolidate or start lower than the end of the day yesterday, right? If you're in a trend, think about this stuff for a minute. This is important stuff. I thought everybody had this figured out. If you have your anchor over here, right? Price comes down and ends the day. Okay, if it's a trend continuation, they're going to pull back possibly into yesterday's range at some visible level and then form an anchor, right? If they're going to reverse, they're going to go near yesterday's low and come down and repeat it, right? Blue tracer type stuff. They might violate the level a little bit, come back above and give you that run. Okay, what goes on at these areas, right? You get an outside bar, a vector type bar always, right? You're going to get some type of outside structure, and that's about as good a candle as you're going to get on a mouse drawing, right? Big outside bar, right? Where do they occur? They occur in level 1 and level 3. The stuff in between usually is the trend. So you're looking for the edge of a range. So that gives you ADR values, blue tracer and ADR values coming together. You're going to see outside bars and then inside consolidation, right? You're going to get a structure to the high. I always draw sell side. No idea why. I've been doing it for years, just a habit. Those are my favorite trades, by the way, to sell. Okay. You're going to get an outside bar that might form the high of the day. Then you're going to get some type of noise inside here, right? Which is just noise, trying to confuse you about directional moves. But if you know this is L3 and it's trading, happens to be trading on a tracer, start tying the elements together, right? And then they pierce yesterday's blue tracer, yesterday's high, and they come back below and they consolidate. Okay, this is starting to look like an anchor. How do you know? I've told you this 100 times, draw a box on the swing high and swing low. This is Bookmap stuff right out of the book. Draw an anchor on the swing high and swing low, right? If it's like new price discovery, new territory where price hasn't been, or if it's repeating an area where price has been and it starts to consolidate, it's probably your anchor. How do you know? I don't. I don't know until they show me their hand. What does that look like? That looks like this, or it looks like this, right? Usually they're going to come back, they're going to run the stops on this side, right? And there's 2 or 3 ways they do that. They trade a lopsided M, right? Where this side is a failed buyer's auction. They failed to take out the high swing, but they take out the low swing. They trade even money, or they trade uneven, right? This is tricky because this looks like a completed buy side auction, but this piece of the segment of the anchor will end usually something that looks like a hammer, railroad tracks, right? You have to start tying the pieces of the candles together. Sorry, my railroad tracks are awful. Okay, it has to end in a hammer, railroad tracks, some type of evening star or morning star formation, depending on which way you're going. I'm showing sell side, right? And it would have to be above this previous level, but end very aggressively, right? Talk about speed, timing. How long do they stay above? If they extend the high and stay above it, you're probably long side in this instance, right? You're probably going to get higher. If they spike the high, end on a wick, and come back below, then you could look for it to cross the range and then give you an entry on the other side. Okay, if you're using harmonics, you look for the overextended run, right? You're not going to get a high or low of the day on a 618 unless it's of a bigger time frame, right? You're not going to get an intraday 618 because that's a pullback on a larger move. But you'll get a bat, butterfly, the overextended ones. Any harmonic pattern that has, and I'm terrible, I draw these, you guys laugh at me, these are the worst, right? Butterfly, bat, any overextended pattern, right, where the wing, this is the worst I've probably ever done, where the wing, right, is above and the M would come in like this, right, probably, right, any wing tip. How do you use these harmonics for this? You retrofit it backwards, okay? You get your wing, you look at the high swing or the wing, whatever the pattern happens to be, it could be bat, butterfly, whatever. I think a shark, anything overextended, right? The overextension is like 121, 1618, 151. You guys know it, 186 or 186. What is it? 187. You know what I mean? I don't know the numbers. I don't use this stuff because I'm looking for the behavior. But this is a good way to alert yourself to an overextended run. There's nothing wrong with them. They're great. Okay, but they're not a trading system. We use them as an alert to let you know that, man, price has run away, it's overextended, and they hit this wing or form this pattern, and then you're looking for some area to get a reversal. Right? This on a let's say on a multi-day run, this would be your high swing of the week. This could occur on a Wednesday. Price starts making its move Sunday, Monday. We covered cycles 4 weeks ago. All right, and then you get to Wednesday and you look at midweek reversal, and one of these guys fires. Then you come back and you retrofit this area on the chart and see if it fits the criteria for an anchor. What's an anchor? Right? High side volatility, coming off the high, consolidation. Then you just box in the area. Everything, ever since this thing happened to me with Bookmap, it's plain as day. Everything can be boxed. Every area on the chart can be boxed in. You can box in 1 hour. Look for breaks and retests on either side. You can box in a 5 minute. You can box in a 1 minute. right? Flip the book, buy the hook. Flip the book, sell the hook. Simple. And that's exactly what I drew right here without saying a word. Flip the book, sell the hook. Get that through your head. Say it 1,000 times in the mirror, whatever. When they open a hole in the book, right? This is all Bookmap stuff, pressing, right? Think about the amount of order flow it takes to combat 10 million buyers or 10 million lots going long. What does it take? 11, 12, 15 million to absorb all this? Whatever it is, price is running up. It's met with a greater force than the market is putting at that moment in time. If the market is buying 10 million lots at these high swings, then the dealers are going, not your day, bro. And they're absorbing it up and putting enough to drive price back down. Then what happens? You see, they decide they want to take this area out. The book is orange and red in multiple sections of stripe. And all of a sudden, the book gets a little black hole in it. Hole in the book, sell the hook. They literally turn all the orders just fall out of the way. It's a crazy thing to watch. The book will be dark and you're like, oh man, they're going to bounce off there all day, twice on Sunday. All of a sudden the book just goes dark. The black space is zero, nobody's home, zero orders in the book. And just the retail traders just falls through like nothing. Then all of a sudden, after there's a hole in the book, I've showed you this several times, they put a big red stripe right there and maybe orange right here, and it fades a little bit, maybe lighter orange. And they come right back to that area and they beat the crap out of it with order flow and it's just gone. And that's how the whole market works. I mean, every single price point that you see, every pipette, every tick, literally is driven by where the dealers place these stripes in the book. That's how the anchor's formed. The thing is that you could start looking at everything as an anchor. If you understand the big picture, right? Let's say you got big picture high side and you have this right here, and then you know, okay, I'm going to sell a micro secondary M. Then you get your impulses, 1, 2, 3. Then you're going to get a pullback and you may get a micro M again, or you might get a micro A frame. Then you're going to go down here, refine the entry, understanding that in order to make this level, the dealer has to press those levels. And for a very short space and time in the book, right, down to a 1 minute, you'll have some pressing right here. And then you could even look to do the same type of thing, fade the retest, which would give you your 1-2 bar, right? And then this is essentially a micro anchor, isn't it? Because at this point in time, they're anchoring these price, getting their absorption or grabbing their liquidity, what everybody's saying now, that's the term now, okay. And then they push away. So in this moment in time, this is an anchor. At this moment in time, this is a secondary anchor. In this moment in time, this is secondary M, secondary anchor. Right? Why? Because this zone right here, they ain't coming back. It's blocked. Right? This area right here, they ain't coming back. It's blocked, blocked, blocked. And essentially, this big block of orders just keeps moving down all day until they get what they need, and then they pull it and they come back the other way. That's how the cycle is generated. So if you understand that and you tie all these little pieces of knowledge that I've been feeding you for the last 20 years, or I'm sorry, 14 years, or if you're new, I've been feeding you since we started this cycle, you have to start tying all this stuff together and trying to make sense of it. It's a lot, man, I understand. But what I'm trying to do is I'm trying to dump this knowledge into your brain, out of my brain and into your brain before I'm not around to do it anymore. It's really just a matter of doing the work. And I know it's hard for some people to get motivated and started, especially if you're 5th year in the business and not profitable. But I got to tell you, this prop firm thing is a game changer for a lot of people because most people don't have $40, $50, $200,000 laying around. I don't know what the prop firm sizes are. I think they're 250s, 400s. I saw some advertising $1 million, but you got to work up to it. You just got to play by their rules, and you're perfectly capable of playing by their rules because there's people getting money out. In this group, it's not like I'm like, oh, some dude down the road. In this group, there's people taking checks. And they've been doing it for 6 months, 8 months, a year. They're quiet about it because they don't want you guys bombarding them. You guys are supposed to bombard me with questions, not them. And they asked me not to mention their name on purpose. It's not fair to them. They're not the instructors. They did exactly, listen, they listened to the same shit I've been telling you for 20 years, 10 years, 15 years, however long you've been here. It's the same stuff I'm telling you. They just did the work. That's the only difference. And if you're trapped and you have paralysis of analysis, then how can you fix that? How do you fix that? How do I help you fix that? Right? It comes back to this. It's really, you just got to do some work. Right? You're looking for your magic in your life. You're looking for a way to earn in this business. The magic's in the work you're avoiding. This might be one of the truest, greatest quotes I read in a long time. You know, showing up every single day and listening to me, but not ever doing anything about it. You know, I feel like, you know, I joke around with my wife about this, and it's no disrespect for the church or anything, but I feel like a minister. Like I get you motivated for an hour or two, and then you go right back to sinning. And that's how it makes me feel. And I'm sad because this is the stuff. First of all, this stuff wasn't even available when I got trained. So I've expanded on the concept I was given, the gift I was given, and I've made it more usable, more up to date, and more friendly. I mean, is anybody in here going to take out a notebook and add 25 pips to the top high Asian range number and then subtract it and try to figure out where the high's coming in? No, that's what the shadow boxes are for. Why the hell would you do that? Are you going to stare at the big board and watch the flow of the tape? Right? You know how like they call a thing called pace of tape. Okay, well, that's what I learned from the big board, pace. But you know what? You could see it in a candlestick. You could see pace of tape in a candlestick by the way it develops. Did you ever notice like some candles go really slow, some candles go really fast? That's pace of tape. Whether you realize it or not, you're a student of that. Right? Because what will happen is it'll go sideways, right? Order flow coming in slow, accumulation, and then bam, a quick move on the candle. Pace of tape changed a lot. What happened? Okay, they shifted the zone on low volume. The pace of the tape picked up, accumulated, picked up quickly for a couple of seconds, and then went back into consolidation. That's right out of Jesse Livermore, right? I used to read pace of tape. The speed at which the orders are coming into the floor. That's what pace of tape is, right? Tape reading guys, right? Used to have that stupid things like an old-fashioned gumball machine with a glass dome over it, and the ticker tape, it would spit out like a roll of cash register tape with orders on it. And they would be like, you could just tell by the way the machine was clicking and the way the receipt paper was coming out of the machine, pace of tape. Those are like old timer tricks. Okay, well, guess what? You got new timer tricks. We got visual charts with candles. We got order flow. We can draw boxes on shit. They couldn't do that back then. They just had to go like, oh, listen to the ticker tape, slow down. So what would happen is the ticker tape would just be ticking off normal. All of a sudden it would get aggressive, and then it would be aggressive up here, and then it would slow down, and then price would drop. That was probably the high of the day back then, how they figured it out. You're alive in an amazing time, man. My first telephone was a Motorola 750. Anybody know what that is? It's a brick. They used to call it a brick. But you know what? It was cool. To have one was cool. Then I think there was some like, well, my very first phone was mounted in my car. My very first portable phone was a Motorola 750. Look it up if you're bored one day, man. If I remember next week, I'll put a picture of it up. It's disgusting. I mean, the technology you have in your hand, you could literally do everything from the palm of your hand. You could get a decent tablet and walk around your house with, I think TradingView is very tablet friendly. MT4 used to be, but listen, MT4 is falling on the wayside. It's going to be done. We all know that. They're pulling all the prop firms out. It's going to be a thing of the past. And that's another thing. If you need to make some adjustments, write to me about it. We'll talk about it. I don't recommend NinjaTrader. The only reason I'm in NinjaTrader, if you guys remember Joe passed away quite some time ago now. I think maybe 4 years, 5 years. Joe used NinjaTrader and he liked it and he coded all my stuff and said, I have all your stuff, man. If you want to switch to NinjaTrader, blah, blah, blah. And I was like, okay, yeah, sure. And he gave me my own stuff coded. That's how it started. So that's why I picked NinjaTrader. I don't recommend it. They're nickel and dimers, man. They charge you for data feed. They charge you for every single indicator. It's expensive. They're $1,000 a pop. Anything you want to add on, any kind of volume studies, any kind of garbage, $1,000, $500 to $1,000 in Ninja. I don't recommend that. There's some other stuff out. If you're looking for another platform, TradingView is pretty good. There's a lot of free stuff on there. It's a good start. It's like $100 a year. I don't know if you need data feed. I don't know enough about it. But if you're looking for another platform, that's a whole separate conversation. Send me an email. We'll talk about it. All right. So can you make an anchor? Can you identify an anchor? Do you know what an outside bar looks like? Do you know what the wide swings that don't go anywhere, right? The wide swings, they tend to stay in the confines. What else? What can you think of? What else can you think of that would help you find an anchor? Right? It's right. We didn't talk about 3 pushes into a level, right? It comes out of Asia. It's 25 to 50 pips higher. I feel like this goes without saying because I've been saying it for 20 years or 14 years since I've been teaching, right? Turn the shadow box on. The shadow box up here will give you the idea of where it should stop hunt to. Does it always hit there? No. That's why I don't look at the shadow box anymore because it doesn't go up there and you sit here with the expectation of it hitting that shadow box. But they run the stops 25 to 50 pip increments outside the Asian range. I used to take this number, add 25 to 50 to it, and draw this myself on the chart. So I figured, why not get an indicator to do that? That's what we're talking about. This is where the anchor is likely to come in. So you should be able to walk up to a chart and go, okay, I'm in consolidation right now. Yesterday, traded all the way up here, higher. They shifted the entire structure lower. They were consolidating low near the low of the day. I expect a pullback of 25 to 50 pips. I'm going to look over to this side of the world and I'm going to go, man, right, maybe where that previous consolidation was and they threw a spike and dropped from yesterday, that's probably where it's going to come in because I noticed that 25 to 50 pip range includes that structure in it. Right, it was a nice swing point. And that's where it happens to line up. So I'm going to look for them to repeat that level. And you could literally draw that level in a little line on there and drag it over. It's usually a 1 hour pivot or a 4 hour pivot, right? What's a 1 hour pivot? A 1 hour pivot point or 4 hour pivot point is the high or low swing of a 1 hour bar. So if you see like a nice set of railroad tracks on a 1 hour bar, right in the middle of the range yesterday, okay, you can take this 1 hour pivot, stretch it over, 1 hour pivot here, stretch it over, and then maybe your stop hunt will do that, or it'll do this. That gives you an area where you can lean on. It's the stuff I talk about, leaning on stuff. Blue tracers are the major thing that I lean on. I love those trades. They're like literally the definition of dire straits, money for nothing. They do it all the time, and they're right there. They break, they test, they go higher, or they come up to it and they fail to get above it and they go lower. It's just one of those things, man, money for nothing. And depending on the instrument, there's 25 to 50 pips hidden in there. If it's end of day and they come back in the range like this, then you could start looking for areas where they'll end the day. Right? If you know they hit it and they end the day 25 pips lower, then you got a 25 pips right in front of you, take it, and they probably go into consolidation. It's all homework and research and stuff that nobody really wants to do. That's the rub. It drives me crazy. Is that I'm telling you this stuff and you don't put it into action or motion. And that's what's holding you back. All right, any questions on this stuff? It was a good question, but the person that wrote that has been around way too long to not know how to find that clearly. And I don't mean disrespect to you, bro. I appreciate you writing it, and I'm trying not to shred you. But this is stuff that you just got to do the work on. And this is for everyone. If you're having trouble locating where the anchor is going to form, then I failed you as an instructor because it's probably in every single video between me, Car, and Jim. And when Doug was here, when Joe was here, years and years talking about where the anchor comes in at. All right. I know no one's saying nothing. I'm scared when you guys get quiet. I feel like you don't want to say, okay, man. All right. Anybody? Anything to add? Jay, what's up? You got anything you want to say? Moshi, how's it going? You want to say anything? Noma, anchor, anchor, anchor. All right. So where are we at? Let's move forward. Okay. So this should be underway. Chart markups, right? Flashcards. You should be working on your high-low drill. That's where we should be right now. Right? So a couple questions came in about the high-low drill. How do you do it? Okay. So quick, briefly, how do you do the high-low drill? First of all I want you to have on your chart is the Asian box and some moving averages. Take everything else off the chart, man. You could have your blue tracer in the basic setup. Don't put any of the junk on there. No subgraph. You don't need the TDI, nothing. I want you to learn how to read candles clean. Okay, so right off the top of your head, where do you think a good probable place where the high low is going to occur? Well, I just went over anchors for 20 minutes. So that's a good start. Blue tracer, right? Everyone understands the concept of go, no go side of structure, right? Go, no go, right? You split the M in half, and this is no go, right? This side is no go, this side is go. Okay, so how do you find that? Okay, it's all the same elements that develop when forming the high of the day or low of the day. It's 3 pushes out of the Asian range. So what happens is when you start seeing it and then you get this pullback right here, let me go to a white piece of paper, sorry. When you get a structural component move, right? Okay, so if you thought the high of the day was here and you sold that, that's okay, you leave it. If you thought this was the high of the day and you sold it, that's okay, you leave it. Now you're up here. No stop. Try to get it in 5. All the order, first couple days, use all the orders you need. But the idea is to get it down to just 2 orders a day and be done with the high swing. Okay, so now you were wrong. You were wrong. Now you see this leg coming in and it pulls back. Okay, you notice like, okay, this might be it. Okay, you don't deal here. Technically, you should be dealing on this side, right? Thinking that this could possibly be the second leg of the structure. You don't deal here yet. You want to split this in half. So now you mark your high, you can mark your low, and you're waiting for it to do this. Then you start dealing in here. That's the go side of the structure. The idea is to catch this thing with a 5 pip stop. Okay, 5 pip stop, high swing. So this will be stopped out. This will be stopped out. This would be a win. And then you got the high of the day. Honestly, now that I'm thinking about it, I didn't write this, but it just occurred to me that if you do this drill, you should never ask me the question, how do I see an anchor again the rest of your life? So I guess that tells me that if you haven't really done this drill and asked me the question, where's the anchor? Here's the answer. Do the freaking high-low drill for a week. You'll start to see the anchors. Because it's going to force you to go over everything that I talk about. Asian range, 25 pips to 50 pips higher or lower, leaning on something from yesterday, the go, no go side, right? If you take this, I'll let it slide, but it's not right because you know that they do it in 3 pushes. So why would you even make your first stab at it until you see the third push? Do it on a 5-minute chart, the pushes, or a 1-minute chart. The pushes will become very clean. And you can monitor on a 5, drop down to a 1, and you'll start to notice these pullbacks and these turns. Hole in the book, sell the hook. Hole in the book, buy the book. The idea is to capture this within a few ticks. And you can leave all these orders open, and you'll start to see where the backup order came from. Because what will happen is you'll be sitting here, you'll deal here, price will go higher and technically would have ran your stop. So you add a secondary order, and then you just pull these orders down and your strings will close down here when you hit your profit target. Do it with a 30 pip target. If you mess with this, seriously mess with it on one pair, and you start to get to the point where you can catch it within a few ticks, you own these guys. You can write any check you want for yourself. You own them. But yet, man, I want to say like 80% of you haven't done this drill. This is probably the most powerful drill that I ever did in my entire trading career. And it was a long time ago, but it was amazing. This is a game changer for anybody that's struggling. Absolute game changer. All right, so that's the high-low drill. I'm looking for that coming up here next week, right? We're on week 3 of the cycle. Then you got to just keep finishing this out. If you've done this and you're ahead of the game, then you move on to number 4. All right, I think this is what I got marked out where we're at, okay? So week 1, chart markups, flashcards, stuff still trickling in. And listen, I'm sorry if you haven't heard from me right away. We got quite a few people doing this, and I'm very excited for everybody, but I'm a little behind on email. I am working through it, and I will answer you, I promise. All right, so work on the high-low drill, send me the results. All you have to do is take a screenshot of your setup, right? And where your strings are, right? You should be able to go for 25 pips off the high, 30 pips off the high. You should just send me something that looks like this with a bunch of strings, or if you choose to get stopped out every 5 pips, that's okay too. Do it in a way that makes you comfortable and makes it enjoyable for you. But you'll start to see that if you aggregate over an edge, you'll be able to pull some serious money out and take 0 loss. The dealers aggregate. What are you afraid to aggregate for? You just have to use proper money management. You're not going to be right every time. And this is where the rub is with aggregation. Because everyone takes full positions on all these aggregates and they get, what would it be, an average order, right? So maybe your average order price is right here. And then it means your break even is here, right? 1 tick below this level. But if you're wrong and it keeps going, now you're dragging 3 orders backwards. You got to figure out where to stop out the structure. Stop out the structure 5 pips above the high swing or the last swing. And you got to understand how much spacing to have in between here. It changes a little bit if you want to do it. But if you want to do it, you're dealing here, never take an order less than 5 pips on top of another order. A good aggregate would be 5 to 7 above or 10. Make the range like 5 to 10, depending on the pair, right? If it's something crazy like crude oil or NQ, you can't take 5 ticks above each other. You'll get smoked. But if it's something calm, more like Euro or Australian, then you can take calm orders 5 pips apart. But this should be 1 lot, 1 lot, 1 lot. Maybe you end your max outlay is 5 lots, right? Or if you trade 10 lots, you take 5 stabs with 2s, right? The idea would be to get it down to 2 stabs with 5, right? On this side of the leg, you go 5 and 5, and then stop out the structure if you're wrong. And then you got the high of the day. You literally, if you got the high of the day and they shift the zone and trap it, you know how they do that, right? I always talk about this. I always talk about how you can draw boxes on the structure, right? And you could take the market, and you literally can watch it descend in boxes, right? What do? They go up, they consolidate, they get everybody's orders, hit the stops, drop, consolidate, hit the stops, drop, consolidate. And if you got right here, high of the day, stop above here, you could get rid of the stop, go screw around for the rest of the day and come back at 4 in the afternoon before close, and you'll be plus 100, right? Plus 100 in your trade with 0 stress. It's like, I don't know, what would it be like? Capture the flag, that kind of game where you capture the high swing of the day. You literally don't need a stop. I'm not suggesting not to use a stop, but I'm telling you that if you get the high swing within 5 pips of the swing, you could just walk away. You don't have to do another thing the rest of the day. Why? Because they ain't coming back, baby. You know, you can come back at the end of London. If you catch this at London Open and just leave, you can come back end of London and then just take your order off. Or put a 75 pip limit in and come back and it'll hit. And maybe trail your stop when you get that shift bar, put your stop right in front of your structure, right? You have 3 orders on, 2 orders on, put your stop right there and leave it alone. Let them shift the zone out of there and block it like these blocks. Once you get that block zone and it starts, next consolidation is under your consolidation, you're done. Leave it be and give it some time to develop. The problem is with algorithms and marking up charts and doing all this stuff, like when you do the algo loop and stuff, is that you don't build the muscle memory, if that makes any sense. Because when you do this in real time, You have to develop the patience that comes with real time. When you look at bars in 10 times speed and you get it, you're like, oh, I'll be rich in 20 minutes. Then you come sit in front of the screen and you don't have, I don't know what it would be, the wisdom or the patience of how it actually develops. None of this crap was available when I learned 20 years ago, 25 years ago. Sorry, it's been 1999. So what is that? It's not 2024. Yeah, 25 years ago. This stuff didn't exist. This looping stuff and going through the chart at high speed, none of that existed. My homework was done one bar at a time, scrolling and in real time. Looking at the board, reading pace of tape, that kind of stuff. I feel like that gave me a deeper understanding of stuff, and we just don't do that anymore. I'm not saying to go back to Jesse Livermore days and start trading on some bubblegum machine in your living room. I'm not saying that. We have technology, it's great. But there's a nuance to understanding the pace in which the orders come in, understanding the speed of orders, order flow type stuff that you can't get from marking up static charts, man. It only comes from real-time exposure. That's why the high-low drill is crazy. Anyone that's ever done the high-low drill has gone on to big numbers in the business. And sadly, it's a handful of people. Nobody wants to do it. If you do it with any, I don't know, enthusiasm and really pay attention, and if you do it with, like, take it really serious and try to see if you can capture it, not like just like show up at your machine and just start throwing order. Oh, I took one here, took one here, took one here, yeah, stopped out, okay, I finally got it. If you do it like that, you're gonna get smoked. If you do it with some real enthusiasm, you're gonna make money in the business. It's inevitable. You will absolutely make money. This is the greatest exercise ever that nobody's talking about or doing. All right, there's my rant for today. What else we got? Okay, so yeah, high-low drill. Once you've achieved this, spend a week executing trades with context and setups. So once you get the high-low drill in place, once you get it done and realize it, then I want you to spend a week after that putting all the context in. Blue tracer stuff, harmonics, pattern stuff, just putting all the things I just talked about, getting the outside vector, knowing where the area where it's going to occur, 25 to 50 pips, all the elements I just spoke of, tie that into getting as part of the drill. And then I want you to use 2 orders to enter and apply everything you learned from the high-low drill and use it for your swing cycles. Okay, so I talked about this, got ahead of myself. So you want to get it here, and then you want to try to get it here, try to get it here, try to get it here. Okay, if you capture the high-low of the day, right? The high of the day is a smaller swing on a larger chart, right? If you start looking at the 4-hour, this is nothing. They don't give a shit about this. It's just another bump on the chart. But right, if you look at the high of the day, this is everything to us because we're intraday traders. If you're trading larger time frames, then you need to practice this, executing on the 4-hour candle or the 1-hour candle, the high swing. It's all the same. Whatever print you look at, the high of the day is a number. So if you look at a 1-hour bar and it goes all the way up and that's the rejection and you nailed it right there, right, then it opens and drops. If you got 0, if you got the high swing of the day, which is 0, it's over. Stops right there. Go have a smoke or a drink or whatever you do at that time of night and come back. Come back an hour later, the railroad tracks were developed. If this closes below that, there probably won't be very much pullback. Right, outside bar to the high, pulls back, takes out the low swing, then you'll get that. That's like a 1/3 pullback car candle move, right? Goes into that level, gone. You come back another hour later, you got a green bar, red bar, or some variation on a red bar, right? It could be a hammer with a medium close. Okay, so if you could do it, if this structure right here is a swing point on a bigger time frame chart, then this structure is just a swing point on this time frame chart. And this structure is the same thing. So you can capture the high swing here, the high swing here, and the high swing here. Then you talk about, you can take an M formation, identify the anchor, pile it on, add on, and then take it out at the end of the day. You just made a monster move. This is the kind of stuff you're not realizing. Or you could take 3 separate trades Spread out over the course of the day and take profit, take profit, take profit, go to bed. That's the thing that when you do this stuff, it opens up an entire realm of endless possibilities of cash flow. Just from one little stupid drill that nobody wants to do. Okay, and like here, I said it, execute here. You could execute trades. Once you complete this, you could execute trades with the highest, tightest possible edge. You can't get a better edge than 5 ticks off the swing or 5 ticks off the high or low of the day. All right, an example is this. Just grab top or bottom edge of the first pullback after the change of direction, right? So what am I talking about? I've been talking about this. This is actually, right, this is your intraday, the safest place you could deal from, right? You got your M structure. I always draw M, right? We know we can box in the candles. We get takes out the low, it pulls back, throws a wick, right? Maybe another wick, depending on what's developing, what chart you're looking at. Now I'm looking out for a retest, right? This might be the failure to return, misses. I'm looking for some type of bar into this structure to give me that high swing, right? It can be an inverted hammer. It could go above, right? If it ends on a pin, it's almost guaranteed to win. If you find this part of the chart and it ends on a pin, it's almost a guaranteed win. Why? Because buyers were trying to take the book over here and it ended on a hammer. That means you have hard compression, pushing the order, absorption, right? And the order book probably looks just like that at that point in time. And then it's gone. This is guaranteed. This is guaranteed scratch or better. Scratch or better, guaranteed. Not to mention you got the high swing of the day within a few ticks. If you didn't deal here, this is the place to practice to deal. And that's the one you want to get down to next to nothing. Why? Because if you deal from here, right, if you catch this, I mean, you're good to go. They're not going to come back and retest it. You can get an even test. But after they shift the zone, this becomes blocked. That means they trapped everybody up here and they ain't coming back, baby. So now you have this block, and if you could deal right out of here, you got the whole day in front of you. Right? And I know there's variations on the theme. Sometimes it's going to go and they'll consolidate and just leave it alone in the middle of the range. You're still going to be up some number over here. You can scratch it or leave it, right? But then what happens is the probability starts to shrink. You got your box right here. They could do this, come back to the level and make a 2-day or 3-day double top, right? This could be Monday. This could be Tuesday. So that's how you get those tracer trades, right? That would be blue tracer type stuff. So if you did this and you didn't scratch out or close it, then you got to be concerned that they might double top it, or if you're long, double bottom it, right? Multi-day M, multi-day W type stuff, right? And they might run a hammer through this side to take out this level from the previous day. We know that. That's just, it's there. It's always there. All right, so we were talking about, I think I'm going to end it tonight here, okay, because I don't have enough time to cover the other stuff. I want to talk about money management coming up. Okay, we're going through the 3 parts of trading, right? You're doing flashcards, markups, and drills right now. You're trying to get your trade management figured out. It's not enough to make a good entry. If you choke after you make a good entry, you're not going to make money in the business. You should have worked on last week's lessons. I only got a handful of them, man, unless I didn't see it in my email inboxes. When you're supposed to move your stops to break even, what your target is. When do you take profits? I talked about this. What kind of numbers are you seeing in front of you after you get your entry? Right? Are you chasing it so late? Are you chasing it so late, like you're here and then you see it, you go, oh man, that was the entry, and you're down here getting in? That's the kind of stuff you got to reconcile with yourself. That's part of the drills. That's why you're doing them. I talked about when to cut a loss, right? If it stays in consolidation above and below your entry and doesn't really give you any motion, you're getting into change of session. These are just recapping on the things that you should be working on. When do you take profits early? Right? You took something, never really got going, starts going into the, I used to joke about, starting to get light outside. That means you're getting to the US session for me, Eastern time. Okay, man, I'm starting to see the sun come up. This thing never produced. I'm going to scratch it out. Okay, and if it's rotating between, here's your entry, and it's rotating back and forth like this on your entry, then just use a limit order +2, +5. This way you get a clean exit and they don't slip you on a market order. Because if you try to get out close to your entry, they'll almost guaranteed to slip you -1 or something like that. It's just the way they do business. So drag a limit order up. Like if you have your TP down here, just drag it up, stick it inside the range, let it work itself out, literally work itself to close, work itself out of the market. And you can't come back and go, oh shit, it went for 900 million, 27,000 pips, Steve. Okay, but at the time you scratched it, it was the right decision. Why? Because you homeworked it, you're confident, and you understand what you're doing in the business. When people tell me shit like that, it drives me crazy because they act like there's never going to be another trade. There's 100 setups a day across a handful of pairs. And if you start including more pairs, there's thousands of setups every day. So if you go, oh, I scratched out and it went for 5,000 pips and I would have retired on the beach right now drinking a Mai Tai. No, you wouldn't have. You're just over exaggerating and overemphasizing the fact that you took +3 instead of +33. You're not going to get rich in one day, man. That's the key. That's the thing to the business. It's a long-term business. It's a long-term business. And it's been here all, listen, you didn't think this MT4 threat happened before? You guys remember what was the big one that went out of business? I can't even think of it. I was at ATC at the time and they were white label for another big company and they all vanished, they're gone. Right, they were out of California. They were a nice little boutique trader, but they were getting their feed from somebody else, but they didn't run stops. They were building customer base and they all were gone. Okay, we're going through another shift in the business. What's your next move? You have to decide. If you're overseas and you could still deal MT4 in those prop firms, God bless you, that's what you do. But if you're here in America and you're looking for another way, I'm going to start migrating you over to futures. Start looking at different platforms and inexpensive ways that if you're going to pick a platform to replace MT4, you want to pick a platform that the indicators are affordable or free and readily available to you at the drop of a hat. Like if you decide, hey, I want this right now, boom, you download it, it's there. Not, oh, let me order it and they'll release it and they want $500 for it. That's what I went through and it was a mistake. But because I had Joe, I mean, he was a little bit older than me, younger than me, actually. I thought he was going to be around forever. I thought this guy would program anything I want. And he passed away, man. So it's one of those things. You just can't count on things in life. You got to just do for yourself. So I'm telling you, if you're looking at other platforms, talk to me about it. I pretty much know every platform out there. And it's difficult. If you're looking for another broker, One World Capital is a really good broker. They're everywhere in the world. They're a lot of liquid assets. They're amazing. Problem is they got a shit platform. I hate their platform with a passion. So how do you get around that? You got to get an API bridge, hook it up to another platform. Don't do it. Pain in the ass. And the API bridge is not reliable. The bridge will drop right in the middle of a trade. Then what do? You got to call the desk and either move a stop or put a stop in or close your order. They've gotten better. I used to use them a long time ago. I love them. They're the best broker I ever had. But their platform's horrible. All right. This is the kind of stuff, man, I can't believe it. I talked through, I barely got through all my lessons. Anyway, look, next thing I want to talk about next week, money management spreadsheet. I have that in queue because we're going through the stuff, right? You should know these things. You got to get a feel good target. What's a feel good target? 20 pips, 50 pips, everyone's different. If you take 25 pips off every day, you can be rich. If you take 100 pips off every day, you can be rich. The thing is, it's consistency every day. All right, there's some people that hit 3 or 4 trades in a row and they lose 10 in a row. They get full of themselves. They think everything they do is going to turn to gold and they stop looking for good, pristine setups. All right, that's where you're at. Send me homework. Any questions real quick for our tap? I could tell when, like, I start getting raspy in my throat. I don't know why. I've been yelling at you guys for so long. It's weird. All right, anybody have anything for me? All right, I'm going to wrap it up here. Make sure I'm looking at the right box. Let me see. See anybody? You guys don't want me to shred you tonight? I'm on fire. All right, I understand. All right, nope, we're good, man. Any questions? All right. Okay, quick recap. I'm working through emails. I'll probably get to you in the next 24 to 48 hours. I'm not that far behind. I'll answer your questions. If you have anything for me, I'll never use your name. I'm not going to embarrass you. Send me what's troubling you and I'll make a lesson out of it, man. Because If you're struggling with it, you're not the only one, man. Most people are struggling with the same issues. All right, appreciate you guys. Thanks for being here tonight. See you next week. Do the drills. Good night.